We have one last additional unannounced presentation for today, and this company, represented by its capable CEO, who just flew into the country this morning, is a fairly recent tech investment, and further announcement in that regard went out this morning, and the CEO will talk about that. This is a location-based marketing business providing services to enterprise clients such as shopping centres, airports, retailers and universities. And we're very happy that he's taken the time to come in, and we'll talk about what happened today. Wayne Arthur is here with us from SkyFi Limited.
Good afternoon, everybody. Thank you for your time. As Alex has mentioned, I'm the CEO and founder of SkyFi. SkyFi is a software company that has developed a number of cloud-based software solutions that operate in a category called Omnidata Intelligence. Now, Omnidata Intelligence is essentially the practice of collecting, analyzing and visualizing data from a variety of physical and digital data sources. And I'll explain a bit more detail about what those data sources are. But they are data sources that are prevalent in physical environments today. Physical environments being shopping centres, airports, stadiums, retail stores, universities, hospitals, the list goes on. These are our customers. Our business model consists of a combination of technology, which we've developed proprietary technology here in Australia, and professional services, specifically in the fields of data science and marketing and digital consulting, which essentially act as a quite a neat wrapper around the tech itself. And it's the reason why we have long-term 3- and 5-year contracts with our customers, and it's the reason why we have a very enviable enterprise customer base on what has been a fairly short journey to date. Our technology platform, we call the IO platform, consists at this stage of 3 software products. We call Connect, Insight and Engage. Each of those products is sold on a monthly license fee, typically on 3- or 5-year contract terms. And so we've had, to this point, our second rerun of our 3-year contract term renewals, and we've had no churn at an enterprise level to date. Connect is the product which collects the data. And again, I'll come back to what data I'm talking about, but essentially Connect is the product that is deployed that collects the information from the technologies that we ingest. These technologies include Wi-Fi, they include camera surveillance systems, people counting solutions, RFID tags, point of sale terminals, apps, beacons, anything physical that can emanate a signal that can help a venue understand physical movements we can ingest today. Insight then is the product which actually visualizes that data in a series of reports that customers can actually capably read and capably articulate an insight from. So it's effectively the BI tool. And then Engage is the marketing platform, as Alex mentioned, which is essentially a product that allows customers to create and send targeted campaigns to their customers in these venues. Services then is the wrapper that we sell in addition to the product. And typically our services team, specifically our data science team, is there to help actually augment the data insights that our platform is delivering into a tangible business outcome for a customer. So we help advise on things like, in the extreme cases, layout of a store, or whether or not to put a new lift system in a new property development, or simpler things like workforce management optimization, pricing, and the impact of a sales event. These are the types of things that typically enterprise customers don't have the in-house capability to actually address. And we, in addition to our platform, we can provide those services. So here are the data sources that I spoke about that we capably today can ingest. And these are typically technologies that every enterprise physical environment already has in place. They all have Wi-Fi, they all have camera surveillance systems, they all have people counting solutions. And SkyFi is the only platform in its class that can ingest data and visualize data across all of those different sources in the one place. And that's effectively one of the big problems this platform is solving, is consolidation of that information. One single pane of glass to ingest, one single pane of glass to view the insight from that information. And it's effectively the correlation of that data together which provides for far more accurate insights than the individual technologies can deliver on their own. This is a snapshot of the customers that we currently service. As mentioned, all of our contracts are minimum 3 years and in some cases 5-year contract terms, and they're renewable. Specifically in Australia, we have today contracted with 70% at this point of the retail property REITs, including the likes of GPT, Mirvac, Dexus, and so on. But we're actually represented across today 10 new additional verticals in addition to the retail property group. So restaurants, stadiums, hospitals, universities, these are the spaces that we can currently add value today. A couple of case studies. First of all, shopping centres. Again, one of our key verticals. Shopping centres as retail landlords traditionally have had very little access to customer information. Their tenants have a lot more information than they do, typically on which customers are coming into the stores or into the malls, who they are, how often they visit, where they go, and so on. And until these malls have started to deploy things like Wi-Fi and cameras and beacons, they had no information on these customers today. And so, in this particular case study, quite simply, we have proven how valuable a simple deployment of public Wi-Fi in a mall can be to extracting first-party data. And so, in this case, Skyfire has deployed its Connect product to deliver a guest Wi-Fi solution across this portfolio of malls. And as you can see from the results, we increased capture of customer data over 500% compared to what was there before. So really simple, but really, really valuable for these shopping centre groups. Quick service retail, again, a big and growing sector for our business. And we're in over 4,000 restaurants now globally, including the likes of Nando's here in Australia. In this case, we were integrated with this particular restaurant group's point of sale terminal and their customer loyalty platform. And what we were hoping to do was to help them, first of all, classify their audience, so categorize their audience based on visit habits and based on spend habits, and then using targeted communications, individualized, personalized targeted communications, drive a better result in terms of an uptick in share of wallet. And again, in this particular example, we've driven sales uplift by audience segment over 40%. Finally, as another use case, universities, which is a really strong and growing sector for our business. Universities have a single problem, which is to understand and categorically prove student attendance to lectures. Something that probably most of us wouldn't have been so keen on back in the day. But ultimately, through simple deployment of Wi-Fi, our technology can anonymously track every Wi-Fi enabled device that comes into a particular room using the Wi-Fi network and our proprietary technology. So irrespective of if that device connects to the network, if Wi-Fi is turned on, that device is probing, we can identify that device's location and whether or not it actually entered that building during that particular time period. And so we've correlated the anonymized device tracking with the student curriculum timetable, and we've started to map out by student and by class which students have a propensity to actually make it through the year and which ones don't. And this is actually linked in many cases to government funding for some of these tertiary education institutions. Our growth strategy takes the form of a combination of our own organic sales efforts, and we have our own sales teams, not very big, but small sales teams, sales and marketing teams in each of the international markets that we operate in. But really, the reason that we've managed to scale our business internationally in a short space of time has been through channel partnerships that we've enabled, through groups like managed services providers such as Optus and Telstra, value-added resellers, and technology partners that include the likes of Hewlett-Packard, Cisco, Deloitte, and many others on our list of 120 supported partners today. And so it's these groups that is allowing us to scale without having to significantly invest in our own headcount. In addition to the organic growth trajectory, we've also been consistently making and looking to make complementary acquisitions to our space. We operate in a fairly fragmented industry. If you think about the range of companies that we can capably influence, ranging from Wi-Fi insights companies to people counting insights companies to marketing services agencies and everywhere in between. And so we've made 2 acquisitions to this point, and then recently, as Alex mentioned today, with the support of Thorney, we announced an acquisition of Bionic Technologies this morning. Now, Bionic Technologies is essentially a people counting solution which specializes in deriving customer insights and analytics through people counting and camera surveillance systems. The upside for this particular business for us is the operating model and the revenue model are identical to Skyfi's. They operate a revenue model which includes deployment of infrastructure, which in some cases we do as well, being people counter solutions, cameras, and then a proprietary insights platform which visualizes the data collected from those people counting solutions in reports for these venues. The second major acquisition point is they operate in an enterprise customer level that is very consistent and strategically aligns with our own, including shopping center groups, big, large retail chains, restaurants, public venues like stadiums. And so there's a lot of complement in the current Bionic customer base that we can capably upsell into with our own products and services. But indeed, the Bionic technology itself is something that we can obviously upsell into our own customer base. Today, Skyfi already, as I've mentioned, ingests people counting technology, and we can visualize data already in our own platform. And so we naturally will see migration of the Bionic customer contracts onto the Skyfi platform in due course. From a pro forma perspective, as I've mentioned, strong upsell opportunity into their portfolio of blue chip customers, which includes the likes of AMP, which includes the likes of QIC and David Jones here in Australia. It will provide us with further diversification in terms of our competitor set, and I'll touch a little bit about our competitors in a second, but ultimately the ability for us to now provide our customers with a people counting solution alongside the other solutions we provide is a natural fit. There will be some hard synergies, obviously, across the technology and support cost base as we merge the businesses together. But most importantly, we see it adding pro forma to our business 30% to our current annual recurring revenues. And also, in addition, since it does operate a non-recurring revenue line, somewhere between $1.5 and $2 million in the first 12 months in non-recurring revenues. And so I'll touch on a bit more detail about our own financials in a second. And finally, a very attractive valuation multiple. Essentially, we have acquired this company in all sum, which includes a small upfront cash consideration and deferred scrip for about $1.67 million, which is essentially just over 1 times their recurring revenues in the first 12 months. And here are some of the reasons why people counting is something that we feel is a technology that our customers and their customers will continue to want to invest in. Airports have a really, really strong issue in terms of understanding and influencing queue wait times, particularly through security. And if any of us have been through the US TSA, it's a nightmare. And so technologies like this are going to help to visualize it in real time and improve it over time, thereby optimizing traffic flow and ensuring that people make it through these TSA lines and associated taxi wait times expeditedly. It'll help to improve retail tenants mix. It'll help to improve understanding of true sales conversion in venues. And another key feature of that particular platform is the workforce management optimization that it provides as well. Being able to help to adjust staffing in stores based on an aggregate of customers that are in there at a particular moment is a strong upside use case for a lot of the retail groups that we're currently working with. Our market opportunity, as I think I've touched on at this stage, is vast, and I won't go into detail about it, but ultimately these are the types of spaces that we can capably sell our product into. And as you can see, there are thousands and thousands of potential venue targets available to us across the globe. We've touched on the customer snapshot. From a competitor standpoint, here are the 11 companies or so that we see consistently compete with us on one or many levels in terms of our platform and services offering. On the bottom left-hand side, you'll see some of the non-enterprise competitors that really do operate only and compete with us on one level, which is the guest Wi-Fi solution. And on the top right-hand side, you'll see the more enterprise-based solutions, of which Skyfi is one. And we've focused our technology and our services offering to sell into that enterprise customer base. We're not interested in the local, one-man band SMB customers with a high churn rate. We focus our efforts on the top-tier customers. They take longer to convert, but they are much, much stickier, and they provide for much longer-term revenue contracts. These are the four companies that we see being mostly aligned to what Skyfire does. And obviously, I'm not going to show you a slide that doesn't show a clear differentiator for Skyfire. But the two areas that we see ourselves being clearly different from anything else in the market, number one, we do more than just ingest Wi-Fi data. That's where we started. That's where all the rest of them still exist. We now ingest, as we've now spoken about, things like people counters, cameras, beacons, so we can visualize a much richer set of analytics for these customers. Number two, the IP that we've built up in our data services team is significant. So our ability to help these customers actually apply the insights is a significant differentiator for us as well as we grow into some of these international markets. And those two reasons are the reason why we think we can become the number one player in this market, in this category of Omnidata Intelligence by the financial year 2021. Financial highlights, and I'm sure you've all been waiting for this slide. Really quickly, how we make our money in three revenue lines. Number one, and most importantly, recurring revenues, which are the revenues that are generated from sales of our platform, Connect, Insight, and Engage, the software modules, essentially, typically contracted on 3 or 5 year contract terms. Services revenues, which relate to the sale of our professional services, particularly data science, sometimes recurring, quite often once-off project revenues, however, always underpinned and following sales of our platform. And then non-recurring revenues, which relates to in the cases where we are actually recruited or contracted to deliver some level of infrastructure as well as our Insight platform. And that does happen occasionally. If we use the backdrop of the last 4 years, ranging from the second half of financial year 2015 into the first half FY 2019, we've delivered a compound annual growth rate in terms of revenue of almost 85%. We've also successfully delivered a diversified revenue mix, strongly underpinned at least 60% by our recurring revenues. Subscriptions, i.e. recurring revenues, have grown at a similar fashion at almost 80% CAGR over the same period. And finally, our EBITDA position, which we delivered at the end of FY 2018, a positive EBITDA position, something that we've continued to maintain through the first half and the third quarter of financial year 2019, and something that we anticipate continuing to maintain. The company does not require capital to continue to operate on its own cash flows, and we've successfully proven that over the last 4 years. I'll close with a brief outlook, the 5 key operational focus areas that we are planning to focus on in order to become that global number one player in financial year 2021. First and foremost, continuing to innovate and expand the offering for our services, for our software platform, and continuing to beat the market in terms of the features that we offer thereby. Naturally, we want to continue to expand our share of wallet from existing customers, which is important to us, and continue to keep the churn rate as low as it has been. Increasing new customer subscriptions, I think, goes without saying. Expanding our services offering as a key differentiator for us into the international markets. And finally, as we've noted this morning with today's acquisition announcement, we do continue to see more accretive acquisitions that will help us to grow in conjunction with our organic growth rate. With that, I thank you for your time.